Stocks trade in a narrow range after Donald Trump points to a possible trade deal with India after sending tariff letters to 14 countries overnight. Financials and energy stocks are gaining while healthcare and consumer durables are the big drags.
Sources tell CNBC-TV18 SEBI is weighing linking exposures in option segment to cash positions of market participants. The move follows alleged manipulation by Jane Street and the significant losses incurred by retail investors in F&O.
Kotak Mahindra Bank sees a strong business update in the first quarter with advances growing ahead of expectations and deposits also seeing a healthy trend, although term deposits remain the key driver.
Titan skids after it posts weaker growth than its peers in Q1 despite low base. What's more concerning is that the growth has come mostly from an increase in ticket size and not a rise in buyer numbers.
And Donald Trump sends out tariff letters to 14 countries that it is not close to concluding trade deals with, including Japan and South Korea. The new tariffs imposed from the 1st of August mostly mirror those that were put in place before the 9th of July pause.
Hello and welcome to Business Lunch, live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Hormaz Patakia. Well, Hormaz, today is a rather muted day. Nothing much that is different as compared to what we saw yesterday, except the fact that the textile stocks are the sector of the day. We're seeing some very big moves come on all of these counters. On the other hand, the capital market players, they're not doing so well.
As has been the case over the last couple of days now for the markets. It is the last 3 to 4 days now, absolutely quiet, or at least on the benchmark indices. But yes, as Vamakshi was highlighting, the textile names, although they are off the highs of the day, but still they are the ones that are being the one significantly in the green. And on the flip side, it is the capital market names that are not doing well, be it the likes of BSE, Angel One, although they too have staged a bit of a recovery from the lows of the day. BSE still remains 6% lower. As you can see, at one point the stock was down 9%. So some recovery coming in from the lows of the day. And Angel One too at one point was down 6.5%. That has too trimmed its losses now down to 3.5%. But some other names that you see at the bottom of your screen, Nectar Life Sciences is one of those names, 20% lower. And this is after they had announced the sale of their API and formulations business earlier in the morning. So that is one stock in a lower circuit in today's trading session. So that are some of the movers. There are lots of activity, stock-specific activity in the broader markets, Vamakshi, and a lot of business updates as well that are putting in a reaction as well today.
Well, absolutely, Hormaz. All eyes are on the updates that have been coming from most of these companies. Take a look at Titan as well. You know, that stock has seen a big slump in today's trading session because the expectation was, like some of its other peers, the stock, the company would post a good provisional update, but that has not actually come through, and resultantly the stock is down and out in trade. What's also not doing too well is the pharma pack. Of course, barring Divislab, where there was an update from one of the brokerages, but most of the stocks like Aurobindo Pharma, Lupin, Granules, all of these counters are actually down and out in trade today. What's doing well, on the other hand, is the IT pack. The Nifty IT index is the top sectoral gainer of the day. Take a look at Coforge. That stock is up almost 2%. Emphasis too doing quite well in trade today. But moving on, let's get the latest on the trade talks between India and the United States. Parikshit is joining in for more on this. Parikshit?
Well, yes, we believe that the ball is now in the court of Donald Trump. India has made a decent offer. That's what sources are telling us. It's a decent offer which gives access to US industrial goods in the Indian market. And at the same time, Indian labor-intensive sectors get good access in the US market as well. We believe that this proposed trade deal could literally cover $150 to $200 billion worth of goods traded between the two nations. When it comes to agriculture and dairy, there can be no concessions either for US or any other country for that matter. So be it wheat, rice, maize and dairy, India cannot compromise on giving market access to US companies in these areas. But there could be certain less consumed items, such as possibly blueberries, pecan nuts, which may get access. Sources also indicating that there will be no further negotiation from the India side. We have nothing more to offer beyond our proposal. Now the US has to clarify whether they accept this or they want more negotiations till the 1st of August. It is important to note that in the last 2 to 3 days, while the Indian side has been hopeful of a deal, while there has been intent to have a deal with the United States, India is also not putting all its bets on the US. Sources indicating that we have varying methods to diversify our exports. We are trying to increase our exports through many ways, and we are negotiating trade deals not just with US, but many other countries simultaneously.
Parikshit, thanks a lot for that update. Now, while the Trump administration says it is close to finalizing a deal with India, at least 14 other countries have been hit by huge tariffs. Here's a roundup of Trump's latest tariff actions.
Donald Trump on Monday began telling trade partners what tariffs they will face from August 1st. That's later than the original July 9th deadline, and the president appeared to suggest the new date wasn't totally set in stone.
No, I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now. We're always subject to negotiate something that's fair, but we've talked to most of the countries, and pretty much they've had their way for many, many decades, as you know. And it was time that we just wanted fairness. We've made a deal with United Kingdom. We've made a deal with China. We've made a deal. We're close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal, so we just send them a letter. If you want to play ball, you have to. This is what you have to pay. So as far as I'm concerned, we're done. We're sending out letters to various countries telling them how much tariffs they have to pay.
So far, 14 letters have gone out to other countries. Investor attention focused on the 25% levies set for major trading partners Japan and South Korea. However, the new tariffs do not add to previously announced duties on specific sectors. That means the rate for cars, for example, stays at the existing 25%, rather than hitting a cumulative 50%. The letters say that any retaliatory tariffs will trigger further US levies. And Trump says it's the least he could have done.
This is not really equitable from our standpoint, because it's just a small token by comparison to the damage that's been done over the years.
South Korea and Japan both said they would continue talks ahead of the new August 1st deadline. Among the other letters sent out, Laos and Myanmar were the worst-hit nations, with tariffs set at 40%. EU sources said they did not expect to get a letter and aimed to reach a trade deal by Wednesday. Earlier on Monday, US Treasury Secretary Scott Bessent said that he expected several announcements over the following 48 hours. He said his inbox was full of last-ditch offers.
Well, let's also hear out what William Lee, Chief Economist and Executive Director at the Milken Institute, and Nomura's Rob Subbaraman had to say on the tariff issue.
What President Trump was trying to do was say, bring your investments into the United States, bring your production into the United States, bring your technologies into the United States, and we will give you a protective barrier of tariffs to protect you from unfair competition from other countries. And right now, President Trump has sent out a bunch of letters saying, okay, you don't give me an offer, here's my offer to you, 25% tariffs. I think that surprised everyone by the fact that they were so low. But I think that's also President Trump's way of saying to everyone, let's talk, and let's talk now. Some of our closest friends have also been some of our most troublesome trading partners, including Canada. I mean, you know, they're trying to protect the dairy industry. The Japanese are trying to protect their rice industry. Everyone's trying to protect their home turf in some way. And I think President Trump is saying, we acknowledge that, but let's try to remove as many of these home turf barriers as we can. Americans just consume way too much, right? And so that we have to live with the fact that we have an overall balance of payments deficit. Where they're distributed, that's the thing he's trying to shift with these tariffs, right? He's trying to shift the deficits to our friends and take them away from our competitors.
The market is assuming that this gives more wiggle room for deals, and potentially is another case of Trump escalating to de-escalate. So markets have reacted, I think, fairly calmly given these rates. I think for India, it's interesting that India did not get a letter, and I think that does suggest that a deal could be actually very close and could be potentially on a relative basis quite positive for India. in all these letters, there was a clause around the tariff rate for transshipments. The tariff rates could be higher, and it does look like the Trump administration is starting to focus increasingly on China circumventing tariffs through third countries, and it wants to really crack down on that.
Time for a short break here on Business Lunch, but just as we do that, remember to tune in to the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. You can tune in to CNBC-TV18 Prime at noon for the Global Reset, 1 p.m. for the Big C, and the Global Lens at 8:30 this evening. Welcome back. Flat as flat can be for the index, and some flashes on your screen as well for Concor. The first quarter business update, total volumes up 11.5%. Domestic volumes up 9%. The EXIM volumes too up 12% on a year-on-year basis. The stock down around about 1% in today's trading session. Remember, it just started trading ex-bonus last week, the 1:4 bonus issue that was given out. So the stock now 1% lower after its business update. But a very interesting study that the market regulator put out yesterday evening, and they had highlighted something similar last year as well about the derivative trading and the losses that individual traders make. Now, if you take a look at the figures, the index options turnover premium is down 9% on a year-on-year basis. However, you compare that on a 2-year basis, it's up 14. On a notional basis too, it's down 29% from last year, but at a 2-year basis, it's up 42%. Now, individual turnover too, down 11% from last year, but up 36% from the over a 2-year period. But the big number though is the 1,05,000 crore figure. That was the overall net loss that derivative traders made in FY25. I'm talking about the retail derivative traders, of course, and that is a 41% jump from the 74,000 crore loss that they had made in FY24. So the losses have widened in the derivatives market for individual traders on a year-on-year basis. Now, if you take a look at the common trend here, 9 out of 10 traders still continue to lose money, as was the case last year as well, and as has been the case over the last 4 years now, starting FY22, 9 out of 10 traders continue to lose money in the market. Now, if you take a look at FY25 on a standalone basis, analyzing it every single quarter, what has happened is that the net loss by traders over quarter 3 and quarter 4 has come down on a sequential basis, as has the number of traders, and that is because of the curbs that SEBI had issued, the measures that they had announced in November of last year, and starting November of last year until April of this year, they have announced a slew of measures, and since then that effect is seen there. And if you take a look at the other metric also, the percentage of loss-making traders is down from quarter 3 to quarter 4, and the average loss per trader, which in quarter 3 was 63,000 rupees, has now come down to 58,000 rupees on a sequential basis in quarter 4, although the numbers are still lower than what they were in quarter 1 and quarter 2, but there is still a reduction seen on a quarter-on-quarter basis. Now, despite this, India continues to remain a very highly traded equity derivatives market compared to other markets, and that is what the SEBI study is indicating, and that is evident from the 5-year CAGR that you see. The index options notional CAGR over the last 5 years has doubled. So that goes to show the kind of activity you have seen, and the measures that SEBI has taken has impacted across categories. And if you see the number of traders comparing the December 24 to May 25, the number of traders for sub 10,000 rupee traded value is down 30%, 10,000 to 1 lakh is down 20%, 1 to 10 is also down 20%. And as the categories start getting bigger, of course, the number getting smaller, and there is a proportional reduction in that as well. So the common trend here is that 9 out of 10 traders still continue to lose money, but the losses though have widened from FY24.
Well, interesting data out there, almost just tells you, the big number, 1.05 lakh crore, the kind of losses that people are making in F&O. So Interesting story there, but moving on, let's get you an exclusive story. Sources are telling CNBC-TV18 that the SEBI may consider linking options leverage to cash positions. Yash tells us more. Yash?
Well, this seems to be a fallout largely of SEBI's investigation and action against Jane Street. What we've been given to understand from our sources is that market regulator may consider linking options market leverage to cash market positions. To simply explain this, SEBI is considering a proposal where only if you have certain amount of exposure in the underlying cash market, equivalent to that, like a multiple of that, could be the allowance as far as the options market exposure is concerned. Options market could be linked to the equivalent cash market through a derived formula. As I said, a formula will be put in terms of the cash market exposure, and a multiple of that could be allowed as far as the options market exposure is concerned. According to our sources, four things are what SEBI plans to achieve through this particular mechanism. One, increasing cash market liquidity. Second, reducing options market liquidity. Third, reducing excessive speculation and protecting retail investors. And fourth one, cut down on the ability of institutions like Jane Street to manipulate indices and make fast money. SEBI is also considering various other steps to sort of identify and plug any more loopholes as far as the options market is concerned. All these proposals could be discussed by SEBI's board very, very soon. Apart from that, to increase cash market liquidity, SEBI is considering a couple of steps like, allowing shorting in the cash market, also enhancing the SLBM or the loan against shares mechanism.
Yash, thanks a lot for that update. Now, one of the stocks sulking in today's session is Titan, as Ramakshi just highlighted earlier. But the other business updates from other jewelry companies have been fairly decent. Earlier today, we did speak to Gautam Duggad, who is the head of institutional equities research at Motilal Oswal Financial Services, to understand his outlook on the markets, the stocks and the sectors that he is bullish on. Listen to what he had to say.
We remain very, very positive and constructive on jewelry. Titan has been our long-standing top idea in not just jewelry, but overall consumer discretionary space, and our view has not changed. Coming to trend, that is where we've had a tactical positioning change in our model portfolio now. We've replaced trend with Jubilant FoodWorks. For a company which is trading at 110, 120p, there's absolutely no room for error. So there are quite a few additions there. Jindal Stainless is something we've added. UTI AMC is a new stock. As I mentioned, Radico, Jubilant, they are new additions. We've added Lodha, Macrotech basically. We've added Niva Bupa. So quite a few allocations, new allocations. And of course, we've also we upgraded our stance on auto.
Well, let's slip into a very short break. But before we do that, here is some good news for our viewers. India's business news leader is now only a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're watching Business Lunch on CNBC TV18. The United Arab Emirates has introduced a nomination-based golden visa for Indian citizens, offering lifetime residency for a one-time fee of approximately 23 lakh rupees. Earlier, pathways required a minimum investment of 5 crore in real estate or business commitments. Shivani Bajaj is here with more details.
Well, yes, the UAE has rolled out the refreshed Golden Visa scheme for Indians, slashing costs and widening eligibility in a move that builds on the India-UAE Comprehensive Economic Partnership Agreement, or the CEPA. Now, signed in 2022, CEPA aims to deepen trade, investment and mobility between the two countries. And this latest Golden Visa reform is a big step in that direction. Indians can now apply for lifetime UAE residency by paying a one-time fee of 1 lakh dirhams, roughly around 23.3 lakh Indian rupees, without needing to buy any property or start a business, which were mandatory under the earlier route. This is a major shift from the existing criteria that demanded around 2 million dirhams, which is around 4.6 crore plus, in property or business investments to qualify for the Golden Visa. This time, the visa has been opened up beyond high net worth investors and individuals, now available to professionals like teachers, nurses, scientists, digital creators, e-sport players as well too, rather than just HNIs and business owners. Applications can be filed directly from India through designated centers or online portals, and candidates will be assessed on professional credentials, clean background and potential contribution to the UAE's economy and culture. Now, experts believe that over 5,000 Indians are expected to apply in just the first 3 months, which is the pilot phase, with more than 4 million Indians already living in UAE. This opens new pathways for tax-free income, business opportunities and full family sponsorship as well, including children, parents and domestic staff. Back to you.
Well, as Vamakshi is already dialing Shivani's number to get more details on this, you can catch more on this on our website, CNBC-TV18.com. Moving on then, Israeli Prime Minister Benjamin Netanyahu, who is on an official visit to the US, has nominated President Donald Trump for the Nobel Peace Prize for, quote-unquote, his role in forging peace in the Middle East. Now, at a meeting in Washington, D.C., he even shared a physical copy of the letter with Trump. Here is what happened.
I want to present to you, Mr. President, the letter I sent to the Nobel Prize Committee. It's nominating you for the Peace Prize, which is well-deserved, and you should get it.
Thank you very much. This I didn't know. Wow. Thank you very much.
Thank you.
Coming from you in particular, this is very meaningful. Thank you very much.
Meanwhile, even as Netanyahu spoke of peace in the West Asian region, Israel bombed Houthi ports and a power plant in Yemen, its first such strike in a month. The military said the strikes were in response to repeated Houthi attacks on Israel.
Well, with that, we call time on this edition of Business Lunch. We leave you with the markets just as flat as they were when we started off the day. The mid-cap index, though, is staging a bit of a recovery from the lows of the day. From Amakshi and me, thank you so much for watching. Mid-cap Radar on the other side.